Hello, stackers. Welcome back to Full Bore Silver, Monday, February 9th. I missed the Super Bowl. I don't know if y'all tuned in. I missed the halftime show, Bad Bucky, or whoever was playing. Just missed it all. Just too concentrated on these silver and gold markets, roaring back. Silver up over 7% today. Gold breaching back above 5K, up 2%. Not bad for a $37 trillion market cap. But I may have to tune into the Olympics, the Snoop Dogg Olympics. It's come across the news feed, very important intel that there is a certain Dutch speed skater I must be watching. Her name is Jutta Leerdam, and she's a fine athletic specimen. And this Friday, we have my favorite athlete fighting. That is Stella Hemmetsberger, the Austrian. She is going to be fighting for the championship this Friday on One Fight Night Championship. And another just beautiful European woman. And people say, Fulbor, you're so ethnocentric. Yes, affirmative, I am. Anyway, I gave you a little bit of misinformation. Technically true. Japan is the largest holder of U.S. debt with 1.2 trillion in U.S. Treasuries, and then basically up to 1.6 if you include their stock market investment, etc. There is a larger holder of U.S. Treasuries out there with 1.85 trillion in holdings. It's actually a conglomeration of family funds, sovereign wealth funds, hedge funds, very confidential. You can't get the information. Of course, somebody knows who it is, but it's based out of the Cayman Islands, the traditional tax haven in the Caribbean, an archipelago of islands where people go to hide money, launder money, etc. And these different wealth funds have 1.85 trillion in U.S. Treasuries, earning about 4.5% return. Now, you'd think if you had billions and billions and billions of dollars, you'd be chasing something more than a 4.5% return on U.S. Treasuries, which has led to the speculation by some that this could be a backdoor way for the U.S. to buy its own treasuries. That's all speculation, of course, not proven. But yeah, it is a conglomeration of these different dark funds which hide money in the Cayman Islands. Also, the Bahamas, also interesting. And the latest tranche of Epstein documents that came out, a $25 million payment out of the Bahamas on behalf of the Rothschild family went to Jeffrey Epstein. That's where they go to hide money, launder money, etc. 1.85 trillion in the Cayman Islands doesn't give me a lot of confidence in the U.S. economic system. Cathy Wood, the famous ARK Innovation Fund CEO, has said, sell all of your gold, divest from gold, and roll it into ARK Innovation and Bitcoin. Okay, no secret that her fund has lost 80% since the peak. She has lost $22 billion for her investors, making her probably the most expensive DEI hire of all time. And it's no secret that her fund invests in stuff like Coinbase and Robinhood, all sort of pegged to Bitcoin. She wants you to take your life savings, your investments, your nest egg, and put it all into her fund so she can lose you another 80%, or Bitcoin, which can pump her fund up from the sewer that it's in right now. I wouldn't listen to a damn thing Cathy Wood has to say. She says that gold will fall because inflation is low and the US dollar is strong. Well, real inflation is probably around 25 to 30%. Not a lot of confidence in the U.S. dollar. The U.S. dollar lost 47% against the Russian ruble last year. We see currencies like the Brazilian real, the South African rand, even the Mexican peso outpacing the U.S. dollar. Which leads me to Christopher Mullen of Technical Traders. He came on this morning and said that he is divesting from his physical silver and gold after this lovely run that we've had, and he's selling his physical precious metals. I'm not sure if he's selling into the U.S. dollar, which continues to debase. I'm not sure that is sound financial advice. Maybe if you're selling into the Russian ruble or the South African rand, it could be a more viable option. Technical analysis can only go so far. We use it as one of many data points. Putting a lot of credence in technical analysis when you have 9 or 10 corrupt bankers trying to tank the COMEX paper price, it sort of loses its viability as an indicator. So trying to zoom out and examine the entire macro picture, you have bullion banks and refineries around the world now selling out. Demand has never been stronger. 2016 was peak silver production. We've been in a 6-year production deficit, 1.2 billion ounces plus. Now demand is off the charts, and industrial demand has never been higher. We see the workshop of the world, which is China, which makes the vast majority of the green energy, the solar, the wind turbines, the EVs, etc., just gobbling up silver for that production so they can then sell it back to the blue hairs in the EU and the US that just love these green products. It's very sustainable. Now, we've been pounding the table for the last 3 months on, of course, physical silver and gold trumps all, but also uranium, rare earth, copper, oil and gas, hard assets, materials, getting away from the speculative tech stocks with overblown PEs, looking at the Shiller-Cape ratio. It's never been higher except for right before the dot-com bust. So that tells you something. I'd like to think that I give you actionable advice. And so we've been pounding the table on these. I want to just read off the 2026 year-to-date performance on some of the stuff that we've talked about on the channel. Uranium miners up 25%, rare earth up 18%, metal and mining up 18%, copper miners up 18%, oil and gas exploration up 16%, coal 14%, gold miners 13%, global value 12%. A fund like EWZ, the Brazilian iShares Emerging Market Fund, these multinational conglomerates that actually produce stuff the industry needs, they produce in a currency that is increasing and their debt is held in US dollars, which is decreasing. So that's an arbitrage opportunity for them, in addition to producing durable goods and commodities that people need, developing countries need, first world countries need for industry, AI, data centers, etc. What is down? Magnificent Seven is down 4% in 2026. Getting back to Cathy Wood, her ARK Innovation Fund is down 8%. The Bitcoin ETF, IBIT, controlled by BlackRock, that beautiful entity, is down 20% as well. There was another funny bit that I saw on X. I sent this over to Aaron at Texas Silver. Some poor schlub rolled out of some of his Bitcoin or crypto or something or other and determined that he was going to become a copper investor. So he went on JM Bullion and bought a 1 kilo copper bar from JM Bullion for $333.32. The only problem is that copper right now per kilo is $12.99, as in $12.99. He paid a hefty premium on that. You're better off going to Ace Hardware and buying a bunch of copper piping if you really want to invest in physical copper. In my opinion, I am bullish on Southern Copper Corporation and then the Sprott Copper Fund, COPP. That would probably be a better angle than buying physical copper, and shame on JM Bullion for treating its customers like that. I mean, that's just laughable. I went over when I got that coin from JM Bullion and they shipped it over and it was completely out of the bubble wrap packaging and it was actually in between the slats in the cardboard box. So it wasn't packed very well. So I'm not sure. I speculated that it could be Cross-Eyed Cash Patel, who was in the packing department over there. I'm not sure who's packing stuff over at JM Bullion. I really don't recommend that company as much as I would recommend like an SD Bullion. I've had great luck with Monument Metals. We'll continue to watch that. These silver markets are strong, gold, all the precious metals, all the commodities, uranium, even lithium today, copper, everything's up today. We're looking good. We're feeling good. It's only the beginning part of the week. Excited to be back. Thank you so much to new subscribers. Great to have you. Please like, subscribe, share to your friends in the know that are paying attention to the macro and the developing decommission of the U.S. economy with all the printing, all the debasement of the U.S. dollar. We're rolling into commodities. We're at the precipice of a commodity super cycle. That's the thesis. Thanks so much. Have a fantastic Monday.